better to talk to about what Geithner is talking about than our next guest. He is a Nobel Prize-winning economist, Joseph Stiglitz, joining us now live from the World Business Forum for another Bloomberg exclusive. Professor, good to talk with you. And, I know you can't see what Geithner is doing right now or hear his comments. However, he's basically focused on this idea that all these countries are trying to export their way out. We could see a trade war. What do you make of that?
Well, I think there is this concern. The interesting thing is the United States was one of the first countries to say that we would hope to, one of the sources of our recovery would be exports. The problem is that the unintended consequences of, you might say, economic turmoil, bad economic policies is what we're seeing. When the U.S. lowers interest rates, when the U.S. floods the world with liquidity,
right, the
effect of it is to try to lower the dollar and cause other countries' currencies to appreciate. So, in a way, what the U.S. Fed has done and U.S. economic policy is to start.
So you blame the U.S.
others see.
So, Professor, so you blame the U.S. then for starting this?
Well, I don't know if I want to blame it. It's the unintended consequence, but it is the consequence of our policies. You know, what is happening now is this curious thing is that Fed policy was supposed to reignite the American economy,
right,
but it's not doing that. And so the flood of liquidity is going abroad and causing problems all over the world.
But didn't you recommend, and this is in your book, don't you recommend, though, that, for instance, Germany should get out of the euro and that the euro should be devalued so that these countries like Spain and Greece can export their way out?
Oh, no, you're absolutely right. There's a lot of currency misalignments. There are large surpluses on the part of Germany, for instance, and
right,
those have to be corrected. So there are two problems going on. One of them is a problem of a flood of liquidity that's causing bubbles, causing turmoil in many of the more successful emerging markets. And then there's the other problem of the global imbalances. They're related,
right,
but they're really two distinct problems.
But bubbles where?
Well, the worry is that the flood of liquidity is going to cause what is sometimes being referred to an emerging market bubble. Money is going in. Worry is that it will cause a real estate bubble, say, in one developing country or another.
Okay.
The problem is very easy to understand. There's a flood of money into the financial sector. It's asking where is the best place in the world to go.
Right.
In a world of globalization, the answer is not in the United States. So U.S. Fed policy is causing an excess inflow into countries all over the world.
But that's only going to get worse, right? I mean, the Fed is now talking talking about quantitative easing again.
That's right. I think this is going to get worse, and the countries are anticipating that. And I've talked to a number of countries around the world, and you can hear their fear. You know, that what they see is it's not a question of their exporting their way into recovery. What they see is economic turmoil being brought to their country by this flood of liquidity.